I'm joined here by one of the world's keenest central bank watchers, Manoj Pradhan from Morgan Stanley. Manoj, next year is all going to be about AAA and BBB. Now, what's that all about?
Well, we like to qualify the kind of regime you're going to see with these little phrases, and it suggests the kind of recovery and the type of liquidity regime you're going to see. So when we talk about the BBB, this is the kind of regime we're going to see in the G10, and we call that bumpy, below par, and boring.
Yeah.
And what that means is that central banks, we believe, are not going to be very aggressive in raising rates or tightening policy. And that suggests that the kind of liquidity regime they'll keep in place is going to be the AAA kind.
Yeah.
So it's going to be ample, available, and augmenting.
Right.
And it really helps liquidity all over the world, if you think about it, because not only is there ample liquidity in the G10, but it also translates into emerging markets, particularly those with fixed exchange rates, who end up importing the liquidity regime through their fixed exchange rate systems.
Via the monetary policy of the big banks.
Exactly. And in addition to that, they have their own really easy monetary policy as well.
Now, Manoj, you came up with this Peloton idea, which I think we're going to show part of the graphic that we've been running. Hopefully it's going to come up on the screen. But I want you to tell us a bit about the central bank Peloton. What's that all about?
It's quite a striking resemblance to the strategies that cyclists use. If you look at the way monetary policies are likely to behave in the coming years, they cluster around very much like cyclists do in a cycling race. Mm-hmm. So cyclists cluster around in a peloton to try and get the minimum amount of wind drag in their face. Mm-hmm. The front riders usually have the most amount of wind resistance, but they also have the most flexibility.
What about when they pull away?
When they pull away, they either try to get the peloton to move with them, and hence, if the peloton doesn't, then they face even more resistance. On the other hand, the people in the bulk of the peloton have to react very, very quickly.
Yeah.
And central banks actually face pretty much the same situation. They're all in it together to get the most out of the liquidity regime. The people in the front, so we had the Bank of Israel, we've got the RBA, we've got the Norges Bank, and possibly the RBI and the Bank of Korea in the first quarter. And as soon as they've tried to raise their interest rates, they face two kinds of headwinds. Number one is they've had currency appreciation, which has been very difficult. The second issue is that their asset markets are linked very closely to the major economies. So in a normal cycle, when they started hiking interest rates, they would see their bond yields rise, and they would see the equity market soften. Now, that hasn't happened to the same extent, because bond yields are very low in the major economies, and equity markets have been doing very well.
Let's just get on to the outlook for some of the big central banks. When is the Fed going to raise?
Well, our U.S. team, who've been very good at their calls, are expecting the U.S. team, the U.S. to raise rates in the third quarter. But before that, you're likely to see some other signs, such as the draining of the huge amount of excess reserves they have through reverse repo operations. Similarly, for the ECB, we are expecting to see the EONIA, which is the rate that reflects what's going to happen, to start creeping up slowly towards the referee rate before the referee rate's actually high.
And for the ECB, the rate rise comes
around the same time in the third quarter as well.
Now, let's look at the Bank of Japan. I mean, they've just kept rates on hold, but what's the expectation going into next year?
The Bank of Japan is a very, very, very different case. They've got a change of government, and our Japan team's expecting some fiscal consolidation there, which is something that is probably going to hurt the Japanese economy. So, in fact, the Japanese central bank is riding firmly into the peloton. They're expected to cut interest rates going into next year. A 5 basis point cut, which for them is almost half their interest rate level now.
We've got, just in one word, you're going to look at the UK because we're here in London. When do we see the UK raising?
The fourth quarter.
Fourth quarter?
Yeah.
Manoj, thanks very much for coming in.
Pleasure.